to talk us through what is going on in Budapest and in Brussels. We have Karol Chrystowski, who is with us. He is the fund manager at Renaissance Investment. Thank you very much for joining us this morning to talk about this. There doesn't seem to be an awful lot of clarity around at the moment. Can you give us your assessment of Hungary's economic situation?
Well, our take is the following. First of all, one should distinguish between really sort of deep fundamental issues there and what market take on this would be. So purely from a fundamental standpoint, actually Hungary seems like a much safer country than, for example, Greece. Right. The obvious parallels have been made, whether we're talking about public deficit, deficit this year, etc. It looks much safer. The IMF line is already in place. However, the message sent was quite horrendous. For our take, that's our take on this. Purely because the usage of certain words like data manipulation.
It was the word default, right? Is that
default,
what
and
frightened
even,
people?
I would actually argue even more important was the usage of word data manipulation by the previous government. Right. Because that opens a sort of closet with all sorts of nasty skeletons. Once the market cannot trust any data.
And that's also what happened in Greece, so worries there.
Precisely, precisely. So it's a different thing when markets have to deal with even nasty data, but data that actually are reliable. Once markets start questioning the quality of the data, that creates a very, very nasty situation.
Now, we saw the effect that it had on the euro. Do you expect this to have an effect across the rest of Central Europe as well? Will people be wanting to sell Central Europe on the back of this news?
Well, to some extent it already has, and you could see it by currencies. Most of the time, and it's the same this time, Polish currency, Polish zloty has been perceived as sort of proxy for the region. It was sold off quite heavily. Our take on this is actually given how important this region has become in terms of supply outsourcing for Western Europe. Cheaper currencies make it even just more competitive. Right. And the balance sheet issues of Hungary are kind of isolated within the region.
So indeed, actually, Hungary's woes could mean that there could be some bargains for investors elsewhere, right?
That's precisely our take on this. One should start differentiating much more, look carefully at the countries that have and have not. The prudent countries are in a much better shape than, I would argue, most of the countries in Western Europe.
Because they're just not bound together, are they, in the same way that the Eurozone countries are? I mean, they've got free-floating currencies and there's a lot more difference between them, right? Precisely.
Good you mentioned this. It's probably the most important feature and what differentiates the region from the troubled countries of Western world, i.e. the floating FX regime. And we could see it already during the recession in 2008, when countries like Baltic states, those with pegged currencies, suffered massive GDP collapse of 15–20%, yet currencies with floating FX regimes like Poland was the only country to grow its GDP. So that's the massive advantage over Western European countries that Eastern European has, i.e. all imbalances are being diffused by floating FX regimes.
And so which ones are the stronger ones? Poland, you clearly think?
Poland, Czech Republic, Turkey, definitely, and of course Russia with no balance sheet issues whatsoever.
Indeed.
In short, the most important countries, the biggest economies of the region.
Now, just going back to Hungary before we go, the IMF obviously has already been in there. Do you think there is actually a chance of a default?
Looking purely at the numbers, once again, I'm assuming the numbers are correct. The chance, I would argue, is very slim. If you look at all sorts of deficits are not larger than average of the EU. You're talking about public debt of about 80% of GDP. With this year, budget deficit at around 4%. These are not scary numbers. However, once again, the PR management, comments like this, then they push markets to create macroeconomic reality. And that's one thing politicians should always understand.
And so the politicians need to give a clarity to the market and to say whether these numbers are valid.
Precisely. However, the mistrust has been planted, and I would argue a bit more trouble ahead before we see better times.
Okay. Thank you very much indeed for coming in and sharing that with us. Thank you.